Welcome to the Emerging Vietnam podcast by HSC Institutional Research, a show where we put Vietnam's capital markets and economics in context. I'm your host, Hugo Bosch, and in this episode of Emerging Vietnam, we will be unpacking Vietnam's April macroeconomic results. Without further ado, let's get started. The recent announcement of the US-China trade war détente was warmly welcomed by the Vietnam market, providing additional momentum for the VN index to almost fully recover to its pre-tariff level. While risks regarding the expiration of Vietnam's own 90-day reprieve still cloud sentiment, the recent release of macroeconomic data for April offers some clarity. Trade was a highlight, with exports up 20% year-on-year and imports up 23% year-on-year, as firms raced to stock up before the tariff deadline. Meanwhile, FDI was also upbeat, with total commitments for the first 4 months of 2025 showing robust growth of 40% year-on-year. Combined with retail sales rising 11% year-on-year for the month, the macroeconomic picture is beginning to look rosier. But what do these results mean in the context of global trade tensions? And do they signal stronger growth going forward? To help us shed light on this macro matter, joining us in our discussion is Dr. Long, HSC's Head of Macroeconomics. Dr. Long, welcome back to the show.
Hi, Hugo. Hi, everyone.
So, starting with April's export data, front-loading was a major contributor to the strong year-on-year growth. As such, can this growth be sustained over the coming months?
Yes. This reflects the continued front-loading shipment during the 90-day postponement of the U.S. Reciprocal tariff, which is set to expire on July the 9th. And I think this trend aligns with our forecast that we expect export to rise 20% in the second quarter of the year, up from 10.6% in the first quarter, driven largely by the strong U.S. demand, which account for more than 30% Vietnam total export. And in fact, in the first 4 months, export to the U.S. Rising 25%, outpacing the 21% growth in the same period last year. However, as the reciprocal tariff set to resume in the second half of the year, we anticipate that there will be a deceleration in export activity. And the extent of the slowdown will depend on the outcome of the ongoing tariff negotiation between the Vietnamese government and the U.S. And we, of course, hopefully for a meaningful reduction in the tariff. That said, we also note the resilient export performance in other key markets of Vietnam as well. For example, export to the Euro area still rising 13% in the first 4 months of the year. Meanwhile, the shipment to Japan and to Korea both increased by roughly 10% on average. So the growth in the market is expected to help to cushion some of the impact of the slowdown in the U.S. market in the second half as the tariff resumes.
I see that China's imports reached a record $15 billion in April, making up 41% of Vietnam's total imports for the month. Does this put Vietnam at risk of U.S. suspicion in regard to potential trade rerouting?
Well, on a broader context, so the export from China rising more than 8% year-on-year in April, and far exceeding the consensus forecast of just 1.9% growth. And among the key trading partners, export from China rising 7.8% to Japan, more than 15% to Taiwan, more than 8% to Euro area, and 20% in the ASEAN region, while falling about 21% to the US. So that's showing Vietnam is not only the risk of the rerouting activity, but also likely from other destinations as well. And domestically, our Prime Minister emphasized that we need to strengthen the efforts against the trade fraud, especially the transshipment of the goods from the third countries, not only from China, for the export to the US. And if we look at the export structure of Vietnam, so we note that the FDI-led sector, including computer, phone, and other electronics products, making up over 95% of Vietnam export to the US, and largely excluded from the reciprocal tariff, even for China. So that's suggesting the limited rerouting risk to the electronics sector. In contrast, we think there's a high risk in the sector like wood and wooden product. Wood face a much higher tariff from the US.
Moving on to FDI, what factors are driving this growth and what types of investment commitments are increasing the most?
In the first 4 months of the year, as we know, the commitment rising by about nearly 40%. Meanwhile, the disbursement still rising higher than our forecast at 7.3%. We note our forecast for the year is rising 6%. So we have to looking into the breakdown in the type of the investment. And when we're looking at that, we note that the additional capital adjustment from the existing project rising nearly 4 times compared to the same period last year to about more than 6.4 billion. And that is the highest number in the last 5 years. Meanwhile, the M&A activity was so very robust, rising 2 times higher than the same period last year to 1.8 billion US dollar. Only one area we see the slowing down is the newly registered capital, which falling more than 23%. But it's actually due to the high base. But in the absolute amount, in the first 4 months, the new capital register is about 5.6 billion. It's still above the level in the same period in 2022 and in 2023, suggesting that there's still no clear sign that the investors are holding back decision due to the tariff concern.
That sounds encouraging. But on a less positive note, despite Vietnam's trade surplus hitting $3.8 billion US in the first 4 months of this year, the Vietnam dong has declined 1.9% year to date versus the US dollar. What's behind this decline, and is it a cause for concern?
We observe the movement of the key currency of Vietnam key trading partner, and we observe that all of those currency has appreciated against the US dollar year to date, thanks to the good news regarding to the negotiation and to the delay of the reciprocal tariff for the 90 days. However, as you mentioned about the depreciation of Vietnam dong, is the only currency in the regions experience the reversal against the overall trend in other countries in the region. So we think there's several reasons contribute to this. Firstly, is due to the record low Vietnam dong deposit interest rate environment due to the continued easing monetary policy of Vietnam Central Bank to support for the economic activity. And in addition to that, more importantly, we think it's because of the cap on the US dollar deposit rate at 0% apply for the Vietnamese Commercial Bank. And thirdly, it's due to the holding activities regarding to the gold because of the rising trend in both domestic and international market. So all of the three reasons likely are the key factor contribute to the weakening trend of Vietnam dong and likely to persist in coming time as long as the Fed continue to stick with this level of interest rate. And so basically, we see the growing concern for the Vietnam balance of payment, mainly due to the rising error and omission item, likely reflecting the increased US dollar outflow driven by the factor mentioned above.
Meanwhile, I see that public investment saw a healthy 17.7% year-on-year rise in April. What does this growth rate tell us about the government's efforts to boost the economy, and how does it compare to its annual plan?
For the whole year, so the government right now, they have a plan to spend about 35 billion US dollar for the public infrastructure. That means 32% higher than the disbursement amount of last year. We estimate that 1% increase in the public investment could boost the GDP growth by 4 basis points. That means the whole amount this year likely to contribute to 1.3 percentage point increase in GDP growth for this year. And that also means that we see the headline number 18% growth roughly year to date is very encouraging, but it's still insufficient compared to the government plan. And we expect that the pace of the growth should be accelerated further in the second half of the year following the effective implementation of the new measure the probability number declined from 63 probability to just about half, 34 probability starting in the second half of this year.
Dr. Lom, thank you very much for sharing your views with us as always.
Thank you, Hugo, and see you again.
And thank you, listener, for tuning in to the Emerging Vietnam podcast. For more information on what we have discussed today, please see the links provided in the podcast description. If you found today's discussion useful, do consider clicking subscribe for more insightful analysis of Vietnam's capital markets. Until next time, hang up line.